All right, guys, what's going on? This is Ryan, aka Cantor and Clark, and it is 11:15 a.m. New York time on Friday, March 27th. And we're going to do a market update. I haven't done an update in the last few days. Josh did an update, I think, 2 days ago. We hope that all of our YouTube friends and family right now are doing as best they can in this time. This is obviously something that we are all sharing to some degree or another. Obviously, some people right now have it worse than others, right? So if you have your health, if you have your family, you do have some things that you should be grateful for. And it's really easy right now to sort of extol those vapid, worthless, kind of empty cliche phrases like look on the bright side and find the silver lining. But there is obviously some truth to that, right? Those are things that are easier said than done for many. But what I would say is in a time like this, you have to distract yourself. You can't just keep your eyes on the news. You have to distract yourself. You have to play your part. And, for us right now, that means maintaining social distancing, right? Even though, my constitution, your constitution, your physical makeup, your immune system might be robust and strong, right? There are others that are more susceptible to the more negative aspects of this virus, right? That are compromised. So we have to think about them. All right, we have to play like a team right now. So that being said, we appreciate you guys tuning in. We appreciate all of your feedback. Remember, we're still doing that lottery where if you leave a comment and you're a subscriber, you'll be automatically entered in to win $100. And on the next video, we're going to go ahead and announce the most recent winners. So we have a few things to talk about. Obviously, I have CNBC open right now. Markets right now selling off a little bit. Not like I would say selling off, but we have a pullback after yesterday's relief rally. And, not a lot of people understand yesterday's relief rally to begin with, okay? One, in a bear market, you're going to have rallies. You're going to have multiple periods where you have, 10, 15%, 20% moves to the upside, normally under 20%, but you're looking at days that are very positive, and people forget that the trend is still down. And this is to be expected. In 2008, this happened as well. In 2008, we had multiple rallies. We had a day where I think we had 19% to the upside, or maybe over a 2-day period, but then we ended up declining another 30% from that peak. All right. And yesterday's jobless claims were released. Okay. And the claims were, so let me just go to, I told you guys about this site recently, and what this has. Yeah, we don't promote for them whatsoever. This is just something that I think is useful. So yesterday's jobless claims right here. All right, Goldman Sachs I think projected 2.5 million, and we came in over 3.2. So seems close, right? 2.5, 3.2. Those are close, but they're not really close in percentage terms whatsoever. This is a extreme number. Okay, historically speaking, I think the highest value we had was somewhere along the lines of 700 to 800,000. And this is likely, I think that this is probably skewed a little bit lower than what it actually is. Okay, excuse me. So over the next week, I think we'll see that this figure goes up. All right. Hopefully this major issue does not turn into another financial crisis, but it sure is setting up to cause some lasting damage, as we've been talking about for the next year. Okay, so yesterday, Wall Street Journal, they shared something along the lines of, we're into a bull market, or I don't remember exactly what the post is. I actually shared it on Twitter, which is just absolutely ridiculous, right? I don't know what they're using to come to that conclusion, whether or not it was just that 20% gain. Just absolutely ridiculous. Okay, we have to imagine that the same way that we approach Bitcoin, right? If we see that Bitcoin puts in a record move to the upside, well, then it's sort of like you're waiting for the other shoe to drop, right? With the move to the downside. It's, okay, we've put in a record move to the upside, well, then we're probably going to expect a big pullback, okay? Something that is far more than what we would normally expect, all right? And you have to imagine that the move in traditional markets to the downside, okay, being that it was record setting in its own respect, is going to come with rallies to the upside that are record setting as well. All right. One thing to pay attention to right now, the VIX has not really dropped, so you could interpret that in two ways. You could interpret that, one of the ways you could interpret that is that the market is not really buying this rally, which I guess you could say is positive, right? There's that delayed response, there's that doubt, and yeah, you could spin that positively, but I just don't think that I don't think that this is the example to extend that belief into. So jobless claims, historic number, but the market rallied. All right, you have to remember that the market reacts off of expectations. So was something expected? Yes. All right, then it was able to be priced in. Okay, and when you know something about when you know about something in advance, it's sort of like if you're watching a train come down the tracks at you. You have a lot of time to respond. All right, you're not going to stay on those tracks and get hit by that train. The market has a lot of time to digest information. It had a lot of time to digest this figure, the potential extreme high value of it. All right, it was all you could say safely that it was assumed that it was going to be a very high number, and if anything, the expectation was that it was going to be a bit higher. All right, it would be one thing if the value was to be expected that Goldman Sachs analysts said it was 2.5 million, and then it comes out that there are 15 million jobless claims. Okay, then the market is likely not going to be pricing in that value. All right, so was it expected? Yes, it was expected. The market rallied, and the market does rally in bear markets. So covering that, what I would say is that Bitcoin and the ES, or what we're talking about is the S&P futures. When I say ES, I'm talking about the E-mini futures contract. They were moving pretty much lock and step for the last, I'd say, 2 weeks. I'm just going off the top of my head. I don't remember the exact figure. But they were moving pretty much lock and step. And I said that, Bitcoin, it seems, has an identity crisis, right? It's like an adolescent kid who doesn't really know, it doesn't really know who it is yet, all right? It's not really totally certain of its own identity, okay? And it's trying to establish a role in the greater landscape. And so sometimes it behaves like, risk on asset. Sometimes it behaves like a risk off asset. Sometimes it trades in tandem with gold. Sometimes it trades, as of recently, with equity indices. All right. And this is something that is self-fulfilled, right? You do see, though, that lately, when I say self-fulfilled, I mean that traders are acting on this manually. And, when the S&P is rallying, then it's sort of like Bitcoin has permission to rally because, if that relationship has existed, then when I see the S&P rally, I'm going to start buying Bitcoin. Okay. And then I start creating that feedback loop. Now, the one thing that was interesting is that even on the lower frequency, rather the higher frequency charts, something like anywhere from the 1 minute down to the 1 second, we see that this relationship up until about 2 days ago was maintained, not to the tick, but there was just a slight delay. I think it was like a 15-second delay. A Twitter account, I think his name is Playgrounds, he was talking about the delay, and I think he mentioned that it was a 15-second delay. I have to look into that. I was looking at a 1 minute chart, and they're pretty much moving, like I said, lock and step. Bitcoin has since looked like it's returned to, after about 2 days ago, it looked like Bitcoin was returning to being something that was more correlated to gold. So you could tell that this thing doesn't really know what it wants to be. All right, which it is useful to trade based on correlations when there are longer term correlations. One of these methods is, one of the ways that benefits from this is, or one of these trading strategies is pairs trading, when there are two assets that are highly correlated and their correlation kind of gets out of whack. You could take advantage of this sort of reversion to the mean quality that exists and place trades based on that relationship. All right, but if anything, Bitcoin doesn't really have any kind of long-term relationships yet, which makes it a little premature to start acting on behalf of any of them. All right, the sample size is still really low. So, all right, now one thing that stands above all is market structure. Okay, on BlockRoots, on the BlockRoots platform, we have a checklist. We start from the higher time frame, you go down to the lower time frame. As far as the weekly, what is the general direction of the market? Where do we sit in relation to greater market structure inflection points? What kind of market are we in? Are we in a rotational or a trending environment? How fast or slow is the market moving? All right, what is the current trend? Are we ranging? Are we trending up? Are we trending down? This is more along the lines of not microstructure, but mid time frames. Where do we sit in relation to the previous week? Are we above it? Are we below it? Are we within it? Key weekly levels, those value areas, okay, points of control, major support and resistances. We go into day types. All right, where have we opened in relation to previous value area? Who's in control? Where's the market trying to go? This is sort of a checklist that we follow. All right. We get down to lower time frames. What is our behavior in the scope of the lower time frames? Is there any evidence that anyone is off sides? Is the market overextended? Where are microstructural support and resistance zones? Do we have a strong base for the move that we're trying to put in? All right, where are the friction or sticky points? Where are the points where the market is likely to speed up? There's a lot to this checklist, okay? The first most important parts about this checklist are where I started, all right? And if you guys want, if anyone wants, feel free. I will give you that checklist, and I'd be more than happy if you leave a comment and you want to see what that checklist looks like. I'd be more than happy to provide it with you. I've came up with it over the last few months. It's been what I thought are the more useful questions to ask. It's obviously a compilation of other checklists as well, right? There's nothing new in markets in that respect. Okay, it's not like I invented the concept, or it's not like I invented the order of operations in markets. We all understand that you should look from the higher time frames first, and that brings us to the most important point. All right, I've hopefully somehow gotten back to this point after speaking in ellipses, but yeah, we're just kind of going off the cuff on this one, right? Like always. So the most important point with Bitcoin is, and this gets to, I posted this recently, right? Something like this. And this is essentially what we're looking at are weekly structural areas, all right? And the idea is pretty simple, okay? Where we sit in relation to weekly structure is helpful in informing our bias, okay? You should have some type of default approach to the market, all right? And prior, when we sold off, or previously when we sold off and consolidated, that range low has been the ceiling for the following sell-off that was larger than the first one, okay, leading to a range that was larger than the first one as well. And I think that the same pattern is occurring right now. So I'm just going off of the most important thing that I'm looking at right now is this prior range low, all right, and where we sit in relation to that. And if you go even on the monthly chart right now, you'll see that this area in market structure is the major swing point on the chart that we have now passed through. Okay, so before this major sell-off, and let me just zoom in a little bit. Let's see if I can get rid of this. So before this major sell-off, this was the major swing point on market structure. Okay, not exactly touching it right there, but you get the idea. Okay, so one of the first questions in that checklist is where do we sit in relation to greater market structure inflection points? These are points that bring a lot of participation into the market. These are major significant levels, and we're sitting below it right now. So my default bias is unless we close back above that level, then I am short biased, right? I am looking for moves that are going to be traveling down rather than up. To put it simply, I'm looking for shorts. Okay. Now that doesn't mean that the market cannot briefly come above that level, right? It does not mean that we can crest that level. And rather, it does not mean that when we do crest that level, it's just a given that our bias has shifted. Right? I need that higher time frame close above that level. So that level is specifically, if you go from the monthly, you're looking at 71. I'd say that the safest bet, okay, is on the lower time frames, you could get a move all the way up to here, right? You could get a move all the way up to here. Right now, one thing that we're seeing is that as the market is kind of selling into this low and maintaining this support, open interest is actually starting to increase right over here. So if we go down to one of the lower time frames right now, on the 30-minute chart, you'll actually see that the open interest is going up as the market is going down. And this could be indicative of, when we look at delta and delta being more negative than anything, look at cumulative delta still traveling down, you could have those potential trap traders in this point aggressively selling into this low. Open interest is increasing because contract values are increasing, and looking for a squeeze to the upside. So that squeeze isn't out of the question. All right, it's definitely not out of the question that we move up before moving down. All right, I just think that there's less follow through to be traded to the upside than there is to the downside. Okay, just to put it simply, I think that the moves down are going to be larger, right, in a week's time from now than any particular move up. If we get a move up, I think it's going to be very short-lived. Sometimes I get into a little word salad and I lose myself. So right now I'm looking for, one thing to pay attention to is the fact that we have this balanced range beginning to form. All right. This is becoming what I would map out as a composite balanced structure. All right. And what I mean is we've had multiple days now where if we just go to this chart, let's put these back on. Previous structures that I've mapped out, composite value area high. What these are multiple periods that I've combined to form this type of profile that shows me where the market is spending most of the time and where the most volume is transacted, and we're forming one of these up here as well. So you're looking for a break from balanced trade. All right. And ultimately, what that means to me is that the move that occurs when we gain acceptance either to the upside or to the downside, that first leg is worth playing. But remember, as I said, and again, this is just my opinion, if the leg comes to the upside, I think that there is a shorter half-life than the one that occurs to the downside. All right. So there'll be more follow-through. But again, just my opinion. Let's look at this real quick, see if there's any obvious signs in divergence, rather in delta divergence. Okay, go on to the lower time frame charts. Let's go. All right. So right now we do have a slight divergence in delta, and you can see that from this low, okay, to this low, we've actually had a lower low over here when they're pretty much even. If anything, this is actually just from, let's zoom in. Okay, looking at this low, let's get a more precise look. So from here to here, this is actually slightly higher, but you could see that there is this divergence in delta, right? So this portion right here being more heavily sold than over here, yet for some reason, price action, rather the more heavy selling has not resulted in price making a lower low. All right, meaning that someone is absorbing this, and we could get that pop up. Right? So don't rule that out. Even though the market looks like it is beginning to roll over, there's been many a time when the market looks like it's going to roll over, and what it is it's just capturing those early aggressive shorts that are looking to get in, anticipating a move to the downside, and then we ultimately squeeze them, and we do get that move to the downside after squeezing them, and someone gets punished first, right? The idea is that someone is early and they're getting punished first. So right now, I would say, it's hard to identify who's in control. One of the questions we always ask is who is in control? What direction is the market trying to go? Well, on the higher time frame, the market has been trying to go up, okay? And it's been doing a good job of getting there up until this point, right? It looks like velocity has begun to taper off. The market has been trying to travel upward. It looks like it's having a rough job of getting there. But on the lower time frame, the argument is flipped, right? It looks like the market is trying to travel down, okay, but it is having a rough time of getting there, all right? The intended direction is down. You have aggressive selling, increased open interest, that delta divergence, all signs that on the lower time frame, maybe someone is getting offsides, right, within this range. Okay, so again, just be on the lookout for that pop up. That's why I don't like to get involved in the middle of a balanced area. Okay, another thing to point out is that the range of price movement over time, okay, just from a daily standpoint, has begun to compress. And this is all to the idea that, a compression in price action, compression in volatility. This is sort of like you're building up that potential energy, right? The flow of the normal flow state is from potential energy to kinetic energy back to potential energy. And we're seeing that right now, that the market is beginning to compress. You can look at the daily range and see that. So from 957 high to low, 476, 530, down to 303, down to 300. All right, so we're beginning to compress from a high to low standpoint. Another thing to pay attention to is where this sits in respect to the previous ATR. So ATR was right around 800, so we've begun to really precipitously drop off. Now, as long as we're between those values or under that value, it's still considered more or less a market norm. But it is still worth paying attention to that it is dropping so much, the range is compressing so much that, the same idea is if you're looking at Bollinger Bands, that you're beginning to sort of bottleneck, right? So what this sets up is, from this range being created, okay, you have people that are entering, right? You have people that are entering in long, placing stops below the lows. You have people that are entering in short, placing stops above the highs. All right. And ultimately, this creates a lot of fuel at the low and at the high. So when you create this balance range, you put the fuel on the outside of it with those stops. And essentially, when you get that break, you'll tend to have a decent amount of follow through from that alone, right? So from those market orders that are looking to either enter into shorts or exit longs, or those market orders to the upside looking to enter into longs and exit shorts. So over time, the more that you move sideways, the more violent this move will likely be. Okay, when finally we do get some level of commitment through either the high or through the low. So I think that pretty much covers it. You guys know that Josh and I have been working with Phemex now. All right, this is the test net right here. They added gold, which is absolutely phenomenal. Gold has been trading in a very, I would say, formulaic and technical fashion. Really respecting market structure. It is a great asset to trade, and now that it is available on Phemex, I would suggest that that you broaden your horizons a little bit, and consider adding more trading pairs, right? Other than just shit coins and Bitcoin, because right now, as you can tell, there's really nothing going on in the whole of cryptocurrency besides with Bitcoin, right? And for good reason. There's really no liquidity, and as far as Bitcoin goes, Bitcoin has dropped in liquidity as well. So it only makes sense that altcoins would suffer that much more. So I think that covers it. All right, be sure to check out Phemex. They're going to be adding equity indices, oil, forex pairs as well. So they have a lot up their sleeve, and we think that they're a phenomenal platform. And it's time to make the switch, because BitMEX has pretty much drawn their last straw. It's drawn their last straw with people that I didn't think it would draw their last straw with. So, and that sounded like a Donald Trump type statement. So that's that, right? Keep an eye on traditional markets, because again, if we see that they begin to sell off, and again, my position, I don't think that we've put in, I don't think that we're just going to be V-shaped reversing. Wow. I don't think we're going to be reversing out of this just like this. I think that we'll probably come down and test these lows again at some point. And if Bitcoin continues to maintain that sort of odd relationship with the ES and the S&P, I think that you could expect downside with Bitcoin as well. And that's just where I sit regardless. I still think that I don't think that we've spent entirely enough time down here. And it's not like I'm trying to impose my opinion on the market in that respect. I just, it looks like the market is beginning to slow down in its rotation. It's gone from a pretty strong move up to more of a rotating, bracketing type of behavior. It's begun to slow down. We began to see volume drop off. Again, you can expect maybe we get that last thrust up, but yeah, that's that. Don't have much more. Hopefully everyone is doing well right now. As always, it's a pleasure, guys. This is Ryan, aka Kenner & Clark with BlockRoots. Exercise proper risk management and trade effectively. I got to come up with a different slogan because I'm getting tired of saying that. Take care.